So, all right, so what we want to do today, I was going to talk about preparing for exam one. Last time we just didn't get to it, but this is really, really important because today we're going to start this on exam one. And you want to do it as we're going. Students, I don't know, I can't remember the lowest score on exam one, single digits, like 6-7%. Because students are so used to multiple choice exams and they just sit there inactive, engaged in class, and that's just death. You're sitting here in that class for 75 minutes. You need to be active, involved as much as possible. And the incentive is to get this exam one ready while you're here in class. So you're not like you got class time and you got exam prep time. We're learning stuff you need to know the rest of your life. So you got to figure out a way not just to get ready for the exam. You got to figure out how you're going to put that into your permanent memory. And so how you engage in this class is going to help. So I'll talk about that. A little bit of talk on the Investment Society. I'll get into that more. I'll definitely send you details once we get the first meeting set up. We haven't quite decided the exact hour we'll start. I know UTSA says we'll be back on campus September 13th. I'm beginning to have my doubts about that. We'll see. So I'm not exactly sure how that first meeting is going to be. Then we'll test and see how you did. Look at last class, how to express markets, how to sound. I mean, this is really critical. I have some really good students who can't seem to get jobs. And I think part of it is they talk more textbook than they do finance professionals. So part of what I want to do is make sure you're using the jargon correctly. There's ways you can say things that are correct, but they just sound wrong. It's kind of like me with Spanish. I remember I was talking, there were some ladies at UTSA that spoke Spanish, so they let me practice with them. And I said something and they were doubled over laughing. So why are you laughing so hard? And they said, well, you use a really fancy word to say something really simple. Well, I just can't hear that. For me as a Spanish speaker, I say stuff that sounds so ridiculously stupid, but I don't know. And it's just because I'm not fluent in the language. Well, the same thing in finance. If you're not fluent in finance, you got to figure out there's certain ways to say things, and that's what we want to do there. How do you express? So if you walk into an interview, you don't use the wrong terms and sound bizarre. And then we'll start getting into exam one. The investment portfolio, what 3 questions do you ask? I doubt we'll get to the major asset classes today, but maybe we will. So how to prepare for exam one. So you're going to start doing that. When we get to this 4th bullet, you want to start doing this. So one thing to do is, it's hard to do that today because I didn't tell you, but definitely this weekend, you've got the class notes and you can't do anything on paper 1. So get the class notes and read in advance. And I'll tell you exactly which pages to read each class in advance of every class. And as you see certain terms, Google them. So Investopedia, I don't know if any of y'all use Investopedia. That's a good source. Wikipedia, I know Wikipedia, a lot of colleges are really negative on Wikipedia. I've yet to see a Wikipedia post on these finance terms that was just completely bogus. They're usually very, very strong. Well, I mean, I've never seen one that was just wrong. I've seen some that could be probably better. But so the way I look at it is, in fact, Google terms and actually put Investopedia into your search and put Wikipedia in the search. So I actually recommend you go from Investopedia, which is usually the simple definition, and then go to Wikipedia, which gives you the more complex, more involved definition. And then Wikipedia has all those wonderful links. And I'm going to show you, especially when we get to duration and convexity, I'm going to show you some really tremendous links in Wikipedia where you can deep dive further and further and further. So start writing out your answer as we go through the material. So no copy and paste. Don't even think about copying and pasting. So the best way to do it is read the notes, listen to the class material in the class, then read the notes again, and then write out off the top of your head without looking at the notes, with no copy and paste. Off the top of your head, write out what you understood at that point. And then go back and look at what you wrote if you got to edit it. So you need to find some point, and this is, boy, there's been so many studies on this. I'm not talking about typing on a computer though, so some of y'all won't want to do this, but handwriting does something to the brain that typing doesn't. So actually writing by hand your answer, you could then put it into Word if you wanted to later. And writing does something to the memory, to the understanding. I think that's why when I look back at my UT Austin, my 236 hours there, why I remember so much of what I studied there. Because I went to class every day and I took copious notes. And then I went home every evening and I recopied all of my notes for all of my class. And then if I didn't understand something in the notes, I used that as an excuse to go talk to the professor the next day. And so that was my approach all throughout, all 6 years. It took me 6 years to get out of my undergraduate, but all 6 years, but I did that every single class. And there was times I didn't want to do that. At the end of the day, recopy all my notes. I didn't have what you have. You have all my class notes in front of you. But I think if I were you, I would be taking notes and recopying them. So you have to figure out your own solution. Your goal is not what's easiest. Your goal is what creates the most retention. So write it. I recommend you write it out by hand, but at a minimum, type it out off the top of your head without looking at the notes. And especially avoid copy and paste. Call me or email me to discuss key concepts. You know, your professors are a major source of reference for jobs, but I can't be a reference for you if I have no clue who you are. So start building that network. There's two networks you've got to be building your junior year. One of them is your students, the peer students, those other people in your class. COVID's made that really difficult, but you also have to build a network with your professors. So I'm giving you an opportunity to call me anytime. I've never told someone I really don't feel like talking about finance right now. I always want to talk finance. So, you know, you're probably going to be upset because I'll talk too much, but I love this stuff. So use that opportunity, especially if you disagree with something. There's something about the brain. If you got a debate or you got some disagreement or something like that, it's just going to help put it into that permanent memory. And then you might create a discussion group within the class. I'm going to talk about this weekend to see if we can't set up some teams. We'll see how they go. It all depends on your schedules, if we can somehow align that. But again, don't copy and paste. Make sure you don't share it. I would recommend you not email your answer to another student, because they're tempted to just copy your answer, and now you've got a plagiarism issue. And then it comes down to, you know, did both students fail or one? You know, I had to figure out which one. I've had some students have done that to help a student out, and ended up that student used their answer. So don't copy, you know, eliminate copy and paste from your word skills and internet skills, and just put everything in your own words. All right. So as we get into this material, be building your answer. I'm going to actually be doing this in a way where I'm going to give you a template. In each class, we're going to review the template we did in the previous class. We'll just be building it, building it, building it. And when you finish the whole thing, you're going to have an incredible answer to the question, I have $100,000, what would you recommend me do? You're going to have the most incredible answer to address that question, which is a very popular question for interviews. All right. So you got to decide how to do it. Hand out your notes, type your notes, find some way to get engaged in this class. So you're not like completely, your brain's not even involved at all in the class until right before the exam. And then suddenly you've got to do 6 weeks of material all at once. That's just not going to work. Change your focus from grades to your focus of, you're a professional, you're getting paid for what you know. How do you get more stuff into your permanent memory so it just becomes automatic? Okay. I've asked some former students who did really well in this class, 5, 6 years later, how much of exam one can you still do? There's one student, Anthony, I remember him. I asked him probably 7 years after he took my class. The template was a little different back then, but said, Anthony, how much can you remember? And he remembered a big chunk of it off the top of his head. So it is possible to put this into your permanent memory. All right, any questions on that? All right, so let's talk to Investment Society real quick. The UTSA Investment Society was started about 12 years ago by a student. It really bothered him that He saw the fine arts college and all these musicians getting together to practice and do musical things. He saw the engineers getting together and doing things. The accountants had their groups, but finance wasn't doing anything. And he thought, we got to get the people of finance together and get them interacting with each other. Again, you have to build those networks, and you need to start applying what you learn in your classes outside of the classroom. So you can start sounding more and more like an investment professional. So the first year we started this, we barely could get 10 students to show up. We've had meetings of over 150 here the last couple of years. COVID has slowed us down, but we still, even last year, we're having meetings with 40 and 50 students by Zoom. So it's still working. There are several employers who know about the investment society, and so they actually ask for investment society students. I actually will give them students outside of the investment society that I know of as well, so I don't limit myself just to the investment society. But I do know my investment society students better because I interact with them a lot more, so it does help with that networking. And it's not just it's also John Toohey. John Toohey is very involved in investment society, so it gives you two professors there that you can interact with and get us on board to help be a reference for you for jobs. Our first meeting won't be next Monday because that's Labor Day, so the 13th. As soon as I know exactly the time, I'll send you the Zoom link with the time, and you can participate that. So here's what I really encourage with the investment society, or something. You got to do something to get yourself ready for these interviews. And interviews happen this fall, right? All y'all know that, I hope. Your job search, if you're a junior, this fall is the most important semester. You've got to be interviewing with 50, 60, 100 firms this fall. And if you're not sure how to do that, call me and I'll walk you through the process. Extremely important that you're interviewing with a lot of firms this summer. I mean, this fall, and it's actually gotten advantageous for you with COVID. As horrible as COVID is, firms are no longer tied to visiting campuses. So what's happened with firms not able to visit campuses is now they'll look at any student from any school. You just got to get into their process. Everything's online now. So, and I can help you how to do that. But one of the things you got to do to get a job is to get them to look at your resume and be excited about your resume. I have a lot of juniors and seniors that come to me and say, Professor, can you help me with my resume? And my initial reaction is, well, you're asking me 2 years late. You need to be working on your resume your freshman and sophomore year. And so the Investment Society really helps you put some powerful things onto your resume. So again, I think I talked last class. Employers want to know that you're curious about finance, that you can apply the material you learn in the class outside of class, that you're teaching yourself, you know how to teach yourself. We've set up the Investment Society so you can put those kind of things on your resume. And a good example is we have a student-run portfolio, stock portfolio. We have sector teams. You can get on a sector team. You can put that on your resume. We recommend people their freshman and sophomore year to be a junior analyst and then become a senior analyst or junior and senior year. But if you've never participated, you can become a senior analyst your first time you come into this. We'll talk about that Monday night. So that gives you something really powerful to put on your resume. We have what's called sector wars, where each sector team presents their recommendations to a panel of chartered financial analysts from here in town. We actually film it. And so students have a video they can put on LinkedIn of their presentation skills. We award the winning team. We now have a scholarship where we're actually going to award a beginning student and a more advanced student with a really good scholarship. All of that looks great on the resume. The other thing we do is we have student-led classes. So we have students teaching students. That looks great to put on a resume. I just think about it. If you don't like talking in front of people, if you were to volunteer to teach one of these classes, so you only have to talk in front of 3 or 4 people, you get some experience, you put that on your resume, and then in the interview, they ask you about strengths and weaknesses, and you say, well, one of my weaknesses is I really don't like public speaking, but I signed up to teach this class for the Investment Society to give me some exposure and some practice. That's a wonderful interview answer to give. We've had several students teach a class for any topics. I'm going to talk on Monday in our first meeting on September 13. the type of classes that you could teach. We'll probably do them by Zoom this semester, or at some point we may be able to come back on campus. So we have our Monday night meetings, we have the sector teams, we have their student-led classes, all of that's going on. So you have plenty of opportunity to put things on your resume. And what we're trying to do is put powerful things on your resume that don't take you 20 hours a week or 10 hours a week. Most of this is 40 minutes, 50 minutes a week kind of stuff, but it looks great on the resume, and you learned a lot of material. You learn how to use Bloomberg, you learn how to use Capital IQ. I'm probably going to teach a class this semester as a prep for the task exam. So most of you have already probably taken that, but so, you know, it's all kinds of things to help you out. So that's what the Investment Society is all about. It's to make you as prepared as possible for interviews and for the job market. Right? If you have questions about that, you can ask me now or call me and ask me. You don't want to just join the Investment Society so you can put the Investment Society on your resume. You want to actually be active and involved, get into it, attend the meetings, participate in a sector or in a class, those kind of things. Really get involved. Just being a member of the Investment Society is not that impressive on a resume. There are other student organizations you can join. So let me know on that. I really push. There's the Professional Businesswoman group that's really been strong. They've been doing really well. There's an actuarial science group that meets, and I'm sure there's many others. So if you have a student organization you want me to promote, let me know and I'll put it out there. Okay, Delta Sigma Phi, I don't know that much about it, but if you send me some information, I'll certainly put that out there. Yeah, so y'all, if y'all send me some stuff, I'll definitely, send me a short blurb or a link to your site or something. I can put it in our weekly announcements. Same thing, Farrah, with the Business Student Council. And if you want to start a group, I'm kind of tapped out as faculty sponsor, but I'll do it again. I think I've been on 5 different groups. But if you want to start one, you got an idea, then call me up and we'll see what we can do. Yeah, that's what I'm looking for is professional development, whether it's focused on finance or focused on resumes, those kind of things. So if it's a purely social group, I mean, that's fine, but I'm looking for those that are really trying to help students get ready. So yeah, Farrah, that sounds great. That's what we're looking for. Same thing, Anthony, with your group. You need something on your resume. One thing or 2 things I've heard from Goldman Sachs and some others that you got to get on your resume. One is very active in your discipline outside of class. The Investment Society can do that for you. These other groups, like Anthony's group, can do that for you. The second thing they need, and this one's a little tougher, but it's some kind of community involvement. So Habitat for Humanity, the Costa Rica trip I do every year after COVID, that can be good. The Investment Society is involved in my Costa Rican charities, so you can kind of get that link. Junior Achievement. One thing I love about Habitat for Humanity and Junior Achievement is it creates a wonderful network. So you might look into those. I don't know if any of y'all do either of those. I know at UTSA I was involved in Junior Achievement. I did it just because I wanted to get involved in local schools. But my Junior Achievement team, I met senior officers around the company, and during my career at UTSA, I was calling them. I remember Roger, he was a high-ranking senior vice president in the information tech. And after Junior Achievement with him for years, I had a special issue I needed help with. Here I'm calling the senior vice president in our tech company, and all I knew about him is we did Junior Achievement, but I felt like he's my best friend. We had worked so long together. So there's something right there, it doesn't take you multiple hours to do, but it looks great on your resume. You obviously want to do it because you want to help the community out, but don't forget those other things that are kind of those residual benefits. You get on your resume and you network with key people. Anyone have any stories about Junior Achievement or Habitat for Humanity or other groups, let me know if there's places you know how to do that and get involved. I do know college students that do that, and it's really powerful. It really helps your resume. So these are the kind of things you need to be doing. If you're a junior and haven't done any of this yet, get started right now. Get it, start getting it on your resume and start getting that experience so you're ready, because October you're going to be doing a lot of interviewing. All right. So let me know if you have questions on that, but let me show you the keys. All right. So you have stock indices. We use the word points, not dollars, not basis points. Basis points does not work here. So use points. Anthony, can you tell me what the S&P did today in terms of points?
So I'd say the stock market, as represented by the S&P 500, was up, or excuse me, was down 13.81 points, or 0.31%, closing at 4,482.38.
Yeah, you got it perfect. You got all of them in there. So the 13.81 points. Why don't we say dollars? I don't know. The S&P, it doesn't really exist. It's a mix. So you can't technically buy something for 44.82. It is kind of in dollars, but we don't say dollars. So if you went into an interview and say, wow, the S&P was down $13.81, they're going to look at you funny. How many of you want to go into an interview and they look at you funny? Probably not, right? That's not your goals. So the S&P was down, and yeah, Anthony said it perfect. Because good job, Anthony. It's rare for the first student to get it right. The S&P was down 13.81%. We also use percent. It was down 0.31%. We don't say it was down 31 basis points. Now that is correct. You can say the S&P was down 31 basis points. If you say that in an interview, this is what they're going to think. They're going to think you're trying to show off. All right. It just doesn't sound right. It's correct. The S&P is down 31 basis points today, but we don't say that. So they're going to think, okay, this is a student that thinks they're being real sophisticated, saying basis points, and they're actually going to mark that against you. That's not the way we talk. So the S&P was down 13.81 points, or 0.31%. Okay. And then give the closing value. I don't know why we do that, but just give the closing value. All right. So you talk about points, you talk in percents and closing value. All right. What about commodities? Here we don't talk points. Here we talk about dollars. And we can use percent. And you can use the closing. The closing is okay. You don't have to. So what did crude oil do today? Someone want to tell me crude oil today?
I'll give it a shot. Why not?
Okay.
Crude oil is down negative 0.44 points, negative 0.64% out of. No.
All right, so that's good. Even you said it right, but instead of points, what do you want to say? It was down 44 cents.
Oh, cents. Okay.
But no, that's right. We don't use to say points. Why is that? Because you can buy a barrel of oil for $67.92. That is in dollars. Okay. So I don't know who said that. I can't get to who's talking. So one thing y'all can help with is if you do jump in, because I can only see like 60 at a time, just say, hey, this is Bob. And because I'm trying to learn your names. All right. So commodities, but good job. And you got it. So commodities, oil prices were down 44 cents or 0.64%, closing it. Now, crude oil is a little tough because you have Texas, West Texas crude, and you got the Brent. So I would probably not give the closing value on oil unless you're real specific on which one you're looking at, because there are multiple oil prices out there. All right. I can't remember which one Yahoo Finance shows, if that's Brent or if that's West Texas. WTI. So there's two of them and they don't always match each other. All right. So the closing is okay, but it'd be a little confusing to say crude oil closed at 67.92 because they don't say, well, which one? Are you talking Brent or are you talking WTI? All right. But you talking dollars. Same thing with, well, all right, someone want to try gold prices and he told.
This is Hunter. I'll give it a shot. Gold has gone at a steady rate from today by $3 and 0.17%.
Great. Closing at, here you can say 1794. We know what gold is, right? There's only one source for the gold. So closing at $1,794. All right. So good job, Hunter. Yeah. Now you said the word steady pace. So, we'll talk on the paper one. What, pick your adjectives real carefully. None of these numbers, I might, Hunter say, gold is pretty volatile. So 0.17%. I might say gold prices are up slightly today, or up $3 or 0.17%. I might use the word slightly because that's not a really huge day for oil, for gold. It's a pretty good day for oil, right? 0.64% is a pretty good drop in oil prices. So, all right. On currencies, do your best. I would probably say the dollar weakened 0.17% today. Currencies are tough. They really are tough. The challenge with currencies is sometimes they're expressed in US dollars, sometimes like the pound, they're expressed in the pound. That's why I hate currencies. I cannot keep them straight. It's amazing. USA had me managing their currency risk because I just cannot. I had to put it in Excel so that all I had to do was key in numbers and it did everything for me because I remember on the CFA exam, I love swaps. I'm a big interest rate swap person. I did swaps at UTSA. It's my favorite derivative. We talk about swaps in my risk management class. And on my CFA exam, part 3, they had a swap question. I thought, oh, great, this is wonderful. But it was a currency swap question. And that question, if you saw my answer, I answered it, struck it out, wrote it the exact opposite, struck it out, wrote it exact opposite, struck it out. And whoever was grading my paper was like, okay, this guy's clueless because if it had been an interest rate swap question, I would have been great. So I'll leave you on your own on currencies. Currencies can be very important. Does anybody know when does the dollar do well? When does the dollar go up? What's going on when the dollar does well? What if inflation's a risk? We get bad inflation news. Inflation's a problem. Will the dollar go up or go down?
It goes
down.
Goes down, right. Inflation is bad for currencies. So if we have inflationary scares, unless inflation is the entire world, right? Currencies are a relative play. But if there's risk of inflation in the United States, the US dollar is going to weaken. What if there's not inflation risk, but the Fed says we're going to raise interest rates? What's the dollar going to do that? What does the dollar think about higher interest rates in the United States? It's going to go up or go down?
I believe it'll go up.
Go up, right? So if interest rates are going up without inflationary fears, that's great. So if the Fed says we're going to raise interest rates, the dollar is going to strengthen. That's going to be a good thing for the dollar. What if we have massive budget deficits? What's that going to do to the dollar? Shouldn't be good, right?
The dollar will go down.
Yeah, if the Fed's printing a lot of cash, then obviously that's going to be bad for the dollar. All right. Now, how much of that is also true for cryptocurrencies? I don't know. It's not my thing. I'm going to try to get a cryptocurrency expert to speak to the Investment Society in November. We have one of our former students has started his own firm doing cryptocurrency, so he's going to be an expert on that. All right. So on currencies, you're on your own, but currencies, you might on currency just say the dollar rallied or the dollar sold off today without actually giving you percentage change. But then which currency? Is it against the euro, against the pound, against the yen? It's a currency, it's the DXY. DXY is the US dollar against a basket of currencies. So you can actually look at that particular currency and it just shows how the US dollar does in general against a bunch of currencies. All All right, so I'll leave your on, but let's get to Treasury bonds. Here, you're going to talk basis points, the direction, not percent change in price. And you're going to do the closing yield, all right? So let's go stock market. The stock market, we talk points, not basis points. We gave the percentage change and we came to closing value, the 44.82. All right. For bonds, we're going to get the basis points. The 10-year treasury, the yield fell 0.1 basis points. That's almost nothing today. Almost no, and that's pretty boring day. Let me see how it closed. I think that was actually flat today at the end of the day. Yeah, it did nothing today. It just sat there. All right. So it actually, at the end of the day, it ended exactly the same as beginning. So I don't like that. So let's jump over to whoops, what did I do? Screen share. All right, so let's go over to the 10-year treasury here. Let's do some historical data so we can actually find some, all right. Now, I don't know how many of y'all watched the 10-year treasury. Do y'all get a sense you're living through unusual times? What's that old proverb, when you live in interesting times and it's actually a curse? Are y'all aware how unusual last March and April were to markets? Were y'all following that? Actually,
They were going up and down. No?
What?
Weren't they going up and down?
Yeah, and how much? So let's look at that. Actually, I'm going to change my mind on what I share here. Share button. Okay, where is it? There it is. All right, I'm going to share something different actually.
Professor Sweet, do you this is Anthony Hollis. Do you ever find yourself referencing the 30-year treasury?
All right, well, so why do we use the 10-year? If you go out on Yahoo Finance, there's only one interest rate on Yahoo Finance. It's the 10-year. Why don't they have the 1 year, the 3-month, or the 5-year, or the 15-year, or 30-year? So specifically, Anthony, to the 30-year is the 30-year is a very supply-demand sensitive bond. There are only very unique people who buy it. So it does unusual things that have nothing to do with the overall market. So if there's a certain supply or demand imbalance, it just moves with that, like pension plans and those kind of things. The swap market's really sensitive to that. The 10-year treasury is used to price mortgages. It's used to price stocks. It's just the most common one. So it's an interest rate that's just the best known. And one thing, Anthony, on the 30-year, I don't know if y'all are aware, but the 30-year actually disappeared. Back during Clinton's administration, we actually had some budget surpluses. They actually shut down all of the 30 years. They paid them all off, and there were no more 30-year treasuries. So it actually disappeared. We haven't had that problem here the last 15 years, but we did have a point there where in fact, I was at a conference, an inflation conference, and one of the economists asked a question that a guy from the Treasury was speaking, and they asked him, will the US government ever borrow 30 years again? He says, no, we probably won't. But now we do, because we have to. In fact, if I were the Treasury, I might be putting everything in 30 years because then you can lock in a really low rate. So we use the 10-year, it's just the most common one. So if you're going to talk interest rates, the 10-year is the most likely one to talk about. So I brought the 10-year treasury in here back from 1962 all the way up to yesterday. Well, okay, so I'm going to go up here. Here's the S&P 500. I'm going to give you a really important number here, the standard deviation of the daily change in the S&P 500. And it's an easy number to remember. It's right around 1%. Okay, y'all see that? So what does that mean? The S&P 500, a 1% day is a one sigma event. So that means today was what, a 0.4 day? Today was a bad day, but it wasn't a horrible day. So what happened last year during COVID? Just amazing, amazing days. We had a 9% day. What is a 9% day?
That would be like 9 standard deviations, sir.
Almost 9 standard deviations. What's the probability of a 9 standard deviation event?
Oh,
We don't know. We can't measure. It's not, if you go on Excel and put a 9 standard deviation event in, it says it's impossible. It cannot happen. So we had a 9% day. We had an 11% day. We had a, look at this, in 1 week, 1, 2, 3, 4, 5, 6, 7, 8 days in a row. It's just absolutely crazy. We had 7 Sigma days, 4 Sigma days, 4. I mean, this is just, I was actually doing some math back then. This period of time was actually more volatile than what we saw in the 2008 crisis, which is hard to believe because I was working in the 2008 crisis and I didn't sleep for like a month. I was head of equities, so I was doing stocks and I thought that was really bad. Well, last year we saw something more volatile than that, just absolutely crazy. This is unheard of. Practically every day for 12 days in a row, almost 14 days in a row, we saw markets move in a way that we did not see those once in 10,000 years or 20,000 years. But we saw 12 days in a row. All right. So last year was pretty unusual. All right. Now let's do the same thing with treasuries. Here's the change in the treasury yield. All right. That 5 is 5 basis points. All right. So if you, let's do it in basis points. Makes it a little bit easier. So yesterday, the 10-year treasury was up 5.2 basis points. Is that a big day or a small day? So let's do a standard deviation on this. And you want to memorize this number. And it's 6.5. So 6.5 is a 1 sigma event. So today obviously was not a big day. But what about yesterday? 5.2 basis points. That's a pretty big day, right? It's almost a 1 sigma event. Everybody understand that? So what's 5 basis points? Well, 5 basis points, the 10-year treasury went from 1.29% to 1.34%. Are y'all getting used to basis points? Work on it. And so you can just, boy, I remember my first job in finance, USAA borrowed money for the first time in its entire history. They had never borrowed money ever before. My boss's boss with the corporate treasury, he just got the number. USAA didn't know how cheap they're going to be able to borrow their money. They were a AAA rated firm, but they didn't know. My boss's boss got that number and it was incredibly good. USAA was going to borrow money very cheaply. He comes running out of his office. I'm the newbie. No one else is in the department. I'm the only person there. This is historical. This is a historical day for USAA. He comes out and says, run. We got it at 3 over. I have no earthly idea what he's talking about. He sees I have no earthly idea what he's talking about. And he's thinking, why did we hire this guy? This guy's clueless. I was clueless. What was the 3, do you think? You've kind of been talking about it. 3 basis points, right? 3 basis points over what? 3 basis points over the risk-free rate. USA was going to borrow money almost as cheaply as the US government. And unfortunate for him, the only person in the department was this newbie who didn't know anything. So it's kind of disappointing for him. But yeah, he looked at me like, okay, where's somebody who knows what they're talking about? I got it. I mean, it's like, it was really a historical day. I was sitting there, a historical day for USA, and I blew it. So that's the way they talk. When I was at USA as head of equities, my office was in the trade room. And I remember the fixed income, the bond investors coming over. I remember Matt one day coming over. He ran a bunch of portfolios. He comes over to the trade desk. The trade desk was right outside my office. And Matt says, did you get it 18 over? He says, and the trader says, no, I can only get it at 14. He says, no, I wanted it at 18. He said, I'm sorry, I couldn't get it. They were back and forth. They never used an interest rate. He didn't say I wanted that bond yielding 4.2%. He said he wanted it at 18. He wanted it at 18 basis points over the risk-free rate. So just think about it. What if you interview for a job where they're doing bonds? You've got to know basis points. It's just so critical. That's the way they talk. And sometimes that's all the way they talk. They never even use an interest rate. They only use basis points. So you got to get yourself really comfortable. So let's try this. Let's say the 2-year treasury goes from 2.35% to 2.42%. Any takers? What did the treasury do? Any takers? Tiana, Mitchell, Taylor, Laura, Ivor,
It went up
Avery?
7 basis points.
Great, Tiana, that's great. That's really very good, Tiana. Last semester, no one could do that. So good. I assume you're a finance major, right?
Yes, I am.
All right, good. So Tiana's got it, all right? What if it goes from 4.51% to 4.37%? Taylor, Laura, Avery, you may want to take those.
So 14 basis points. This is Chris.
Chris, okay, Chris, was that a big day or a small day?
It's a small day.
14 basis points. So good job on getting to 14. Well, what's a big day? 6.5, right? And it went 14. So Chris would be a big day, right?
Okay.
Yeah, all right, but good. It sounds like y'all getting the basis points. All right. So there's 2 things on the treasuries you got to get is how many basis points it is, and then you have to have some sense if it's a big day. So if you're walking into an interview on this day, yesterday the treasury was 451, now it's 437. Something big happened. Now, what would it be for something big to happen when interest rates fall 14 basis points? I'll give you a choice. Good economic news or bad economic news? Which do you think it would be? When did treasury rates fall? During good economic news or bad economic news?
Would it be bad economic?
Bad.
Yeah, bad news. When we get a bad economic news, treasuries will fall in yield. What's the treasury price doing? The price
It's
is
rising.
up. Yeah, significantly. So that's where you can say treasuries rallied significantly. This is a 2 sigma event, right? So you would have to say treasuries rallied significantly today as yield on the 10-year treasury fell 14 basis points with yields closing at 4.37%. Whoops, it's not dollars. Now, what do you notice? I did not put anywhere in there. I never gave you the price of the 10-year treasury. Now, I'm going to show you a website when we get closer to paper 1. It's finviz.com. Not Funviz. That would be a great website too, but finviz.com. They will actually show you a price for the 10-year treasury, but you would never use that. If you went into an interview and say the 10-year treasury was at $93 today, they wouldn't know what you're talking about. And the reason for that is there's multiple 10-year treasuries. A 10-year treasury is just a treasury bond that's maturing in about 10 years. Well, there may be 30 of those. There may be some that were a 15-year bond that were issued 5 years ago. There might be some that are 20-year bond that were issued 10 years ago. They're going to have all different prices. So price is not important on 10-year treasuries. So you want the yield, the change in yield, the 14 basis points, the closing yield, 4.37, and then you just want to comment about the price change. And you don't even say the percentage price change. You just say the price was up significantly or down significantly or is flat, all right? Pretty important. Now, about a half the class messes that up on this first paper. So it's tough. I know it's not something students are real comfortable with. Let's go back to the COVID crisis. We saw some ridiculously amazing things last year. Look right there, 20 basis points. What did treasuries do on the 9th of March? Did they rally or did they sell off?
They sold off.
Well, the yield fell. What did the price do?
Went up.
Went
That
up.
was a big rally. All right. Anybody know anything significant about that 0.5%? That's what the 10-year treasury was, 0.5%. Anybody want to guess what the historical significance of that number is? We've had 10-year treasuries for what, a couple hundred years now? Any guesses on that number?
Is that how, Anthony Hollis, is that how it's historically grown every year?
Well, I mean, it's been falling every year, right? Because it used to be 4.5%, and then when I was in college, the 10-year treasury was like 15%. I will show y'all. It's hard to believe y'all weren't alive when I was in college. That's kind of depressing to me, but when I started college, sorry, I'm so old, it takes me forever to get back to when I started college. So I started college right out of high school in 1980. So your parents may not even been alive then, I don't know. So did these numbers look a little unusual? 15%. I remember when I graduated from college, I graduated in 1986. But I had a CD, a bank CD, and it was maturing right when I graduated. And the bank says, we can roll that over at 15% if you like. And I said, 15%? Nah, that's not a good rate. I don't want 15%. Any y'all want a 15% risk-free CD today? Any takers?
Yes, sir. Please.
Yeah, that'd be great, right? Would you buy like a 20-year 15% CD? That'd be pretty good, right? So look at that, 10.46. And then I'm showing this number last year. That was 0.5%. So acres, and what's significant about that 0.5%?
This is Hunter Garza. I'm assuming that's the lowest it's been.
Lowest in the entire history of the United States. You guys are living through history. Did you know it? That was at that one point. I can't find it. Where was it? I forget what day it was on. I should know that from memory because it's such an important day. But
I think it was March 9th.
March 9th. There it is, March 9th. So put that in your memory break because it came right, your yields came right back up the next day. I went out and I bought a short treasury ETF on that day. I went out and bought a bond fund that goes up when interest rates go up. So it's shorting the market because I thought that rate was so ridiculously low.
How did it look in 2008?
Well, it did not fall nearly that much in 2008. They did fall in 2008, no question, but they weren't nearly as low as they are today. Oh man, it's hard for me. I need to find a way to get the year to year. So they got down below 4%. You know, the bottom of the market was around November. So, you know, got below 4%, even got below 3.5%, 2.5%. But nothing like what we're seeing today. Interest rates have been ridiculously low in a really unusual way. All right. So this is something I recommend is that you actually bring in this data and get a sense of history. So you could very, very quickly graph this, right? It'd be really easy to graph this and just look at interest rates over time. And then you see how low we got last year. You see how that was the lowest point ever. You see my college career. So I go to college and interest rates, we're getting used to interest rates in the teens. And then we had that huge rally coming out of the 80s. You had Volcker essentially giving us 2 recessions in a row. What happens in a recession? Interest rates fall, right? That was his goal, is give us some recessions. Interest rates get inflation back down. You know, Ronald Reagan's like, thanks, Volcker. I become president and you give us 2 recessions right in a row. But fortunately, it happened in Reagan's first and second years of his office. So by the time he got to his 4th year, the economy was coming back. But yeah, we had 2 recessions right in a row, 1981, 1982. So Volcker was trying to get inflation, and poor Jimmy Carter, man, he was, you know, in high inflation, high interest rates, oil prices, all that kind of stuff. So you get a sense of history looking at these long-term trends. All right. But the key number is the 6.5 and the 1%. Y'all can see how those are so powerful. Just those two numbers. S&P 1%, 10-year Treasury 6.5 basis points. It gives you in two numbers an amazing perspective that I think probably 99% of finance majors don't have. So I'm giving you an advantage over 99% of the competition just by knowing those two numbers. All right. So keep those in your permanent memory. Yeah, certainly inflation's a risk today. I'm not in the camp that thinks inflation's obviously a risk because we're coming off of such low levels last year. And I do think a lot of the inflation right now are more supply demand imbalances than they are consumer driven type of things. But we'll see. Obviously the Fed's going to have to watch that. One number, if you want to, I have a YouTube video that shows you how to do this. It's the break even forward inflation rate. If you want to learn how to do that, it's probably the single most important inflation number out there. It's what the bond market thinks inflation will be 5 years from now. And it's probably the most important number to the Federal Reserve. And you can calculate that number yourself. If you want to learn how to calculate that number, email me and I'll send you the YouTubes that show you how to do that. If I were you, I would be calculating that break-even forward inflation rate every single day and watching it. Because if it gets above 3%, the Fed probably has no choice but to raise rates. And so it's a pretty important number to watch. And it's not a difficult number to calculate. In fact, in your first job, you can probably blow them away if they need an inflation forecast and you're sitting there and say, you know what, why don't we just use the break-even forward rate? They probably all fall out of their chairs and say, wait, I thought you just graduated. Yeah, but I know stuff. So, it's a good number to know. I didn't know this number 15 years ago. I went to that inflation conference and this guy named Brian was an economist. He showed us how to do this. I started doing it immediately. I thought it was so cool. So powerful, so simple, but it sounds really sophisticated. So if you want to know how to do that, I actually think it's in our class notes, actually, so you can teach yourself off the class notes. All right, any questions about this? You see, as a professional, what you need to learn to understand your profession, what's going on in markets, and sometimes it's not all that complicated. All right, so let's see if someone, I'll do a day, and then let's see if y'all can do it. I'm going to do April 15th. Tax day, or I guess it really wasn't tax day, right? Did they give us an extension this year? So let me. Treasuries. Treasuries rallied dramatically today as the yield. I don't always say it the same way. 10-year Treasury fell 10.8 basis points to a closing yield of 1.53%. All right, I'll let y'all write that down or type it. And then we're going to try a different day. Y'all got it? Or take a picture of it or something. Okay, I'm not going to let you see it when you do this. All right, let's do February 25th. Any takers? Farah, Giselle, Taylor, Mitchell, any takers here? Blake?
I could try.
Okay.
Let's see. So, Luke DeMario.
Okay. Yeah, I do recognize your voice. Okay, Luke, go for it.
Treasuries fell significantly as the Treasury yield increased 12.9 basis points to a closing yield of 1.52%.
Very good. He's got it. So the 10-year Treasury increased, rose 12.9 basis points. Y'all know how to abbreviate basis points? Sometimes you might hear it. Now, if you really want to blow them away in an interview, So Luke, if you really want to sound like you're out there, don't say basis points, say bips.
Bips.
So bips, B-I-P-S, and you abbreviate it BPS. So 10-year treasury rolled 12.9 bips. So you're walking in, okay, so Luke's walking into his interview and they say, hey, you've been watching markets today? And Luke says, yeah, Ma, where do you see treasury prices really selling off today? Man, the 10-year treasury goes up 12.9 bips. He's got the job. He already sounds like someone with 10 years of experience, all right? So start getting this jargon. So you don't sound like a college student, you start sounding like a professional. So bips, I love using bips. Just sounds really cool. All right, any questions on this? Are y'all getting comfortable with this? You got to do this in paper 1. Now, if we did February 23rd.
Question.
Okay. Go ahead.
How do I phrase it? Why is it considered an increase?
Considered a what?
Wait, no, I figured it out. Never mind.
Okay, all right. Other
Sorry about
questions? No problem. This is sometimes, you know, y'all seen this in your 3013, but now I'm throwing the jargon on top of it. And now what you got to do in paper 1 is now you got to get the jargon and you got to tie it to what's going on with the economy and the news. So that's when you bring it all together. So if you haven't done a lot of this, I'm hoping you won't just do this for paper 1, that you'll start doing this all the time. You know, you got to get into this every single day, watching markets, what's going on. Boy, I tell you, in 2008, I didn't sleep hard at all anyway. So I would get up at 3 a.m. to go see what the Japanese market was doing. It's like, is tomorrow going to be a horrible day or a good day? That's just the way we were. I remember one morning I woke up at 2 a.m. I couldn't sleep, went to Excel. I built an entire model in Excel for an option strategy I want to try the next day. I emailed it to myself just in case. The next day I went to work and I tried to build it and I couldn't get the same answer, and discovered that what I did at 2 a.m. was correct and what I was doing at 8 a.m. was wrong. So I just used the one I built at 2 a.m., called my option trader and said, what if we did this, this spread in this market? And so, you know, that's, well, you're going to have a 2008 sometime in your career, right? So you just have to, this stuff's not just going to be interesting to you. It's going to be raising your blood pressure quite significantly and your pulse to about 200. It's just the nature of our business, right? You have those years that are just crazy, like last year. Yeah, I can remember stuff. I can remember the 87 crash, Anthony. So I've got y'all beat. All right. So are y'all getting it? Practice it. Start talking every single day. If this, the last thing you do is the next time you do this is for paper 1 and you never do them again, then you're going to forget all of this in 3 months. It's going to be completely a waste of your time. All right. So we're going to talk. All right. Exam 1. Question 1. It's a massive question. It's essentially a paper more than an exam, but so I will let you do this open book. I usually don't. I was really worried 2 semesters ago when I had to do an open book. I thought, when the grades, everybody's going to get an A. And we did the exam, and the exam grades were exactly the same as the closed book exam. I don't understand that. And I understand it because there's far too many students that are taking multiple choice exams and they just can't switch their thinking. If you're really going to understand finance, it's writing it down in words in an organized way. So I'm going to give you a template. The template starts with a definition. What is an investment portfolio? And then we're going to go from there to these 3 questions you ask: why, what, and how. And then we're going to go into the what question, and we're going to flesh that out in minute detail. And I'm going to give you not just a template, but I'm also going to give you an acronym. I'm going to give you some tricks to remember them. Have any of y'all ever heard DC cuts I? From any other finance student out there? We should make some t-shirts that say DC cuts I. So I'm going to give you DC cuts I. It's the template for bonds: duration, convexity, credit, US, non-US, taxes, structure, and inflation. It's a great list. It covers just about everything is related to bonds. Then you're gonna have a $1, BUCS. We're gonna use that for stocks. That's beta, US, non-US, capitalization, and style. So I'm going to give you some ways to understand these, put it in an organized way. So when you get a question, you're not just out there flying all over the place. You can, in a very organized way, walk through the entire process. All right. So what you need to do is get this template so that your mind can quickly go to whatever the question is. So let's say you get in an interview and they ask you a bond question. DC cut side, duration, convexity, credit. You can quickly have a list of things you can draw on, and you can easily talk about each of those. So is this a duration question? Is it a convexity question? Is it a credit question? Those are all the things you want to know, and you very, very quickly can go to right to the pieces that you need, all right? So it's going to be many, many pages of the notes. I'm not using the class notes here. I'm putting this in PowerPoint because some students, they get real distracted, but I have an entire page of Word and all that text. I do want to go on the screen show. Y'all tell me if it's doing screen show when I do it. Are y'all seeing screen show?
Yes.
Yes, okay, thanks, Taylor. All right. So let's start off with what is an investment portfolio? So someone walks up to you and say, okay, I just inherited the $100,000. Can you tell me what to do with it? And so you say, well, you want to create an investment portfolio. An investment portfolio is what? It's a collection of assets held for some future purpose. Retirement, you're going to buy a house for your heirs. You want to leave it for your heirs. Okay. There's a few key terms here. First of all, I said a collection. So it's a bunch of different things. We're not going to put all of our money into Apple stock. So it's a collection. So diversification is going to be important here. The second word you see is assets. You notice I did not say a collection of securities. I said a collection of assets. What's the difference between a security? Well, let me ask it this way. Are all securities assets or are all assets securities? Which way do you think it goes?
All securities are assets.
All securities are assets. Can you think of an asset that is not a security?
Land.
Land, real estate, gold, right? So securities are what? Stocks, bonds, exchange traded funds, mutual fund. We're gonna get into all of those. But a security is something that trades. It's very liquid, trades on markets. But assets include securities, but also non-securities like land and commodities. If you buy an exchange traded fund on oil, that's a security. But if you actually buy barrels of oil, that's not a security. That's an asset. If you buy oil futures, that's a security. If you actually go out and buy 10 barrels of oil and put them in your backyard, your neighbors may not like that, but that's not a security, that's an asset, okay? So if you buy a house, I just bought my mom's house as part of her retirement. Her retirement plan was for me to retire early with a lot of money. But she had a house, so I bought her house from her so she'd have money to pay bills. I gave her a really good price. Don't think I'm one of those guys ripping off his mom. So now I'm a landlord and my tenant is my mom. I was joking with my brother that she's going to apply for one of those moratoriums, you know, rent moratoriums or whatever. But anyway, so now I own some real estate. That's not a security. That's an asset. I'm probably buying at the top of the market. I gave her a really good price and I'm probably going to lose money on it, but you got to take care of your mom, right? So that's an asset. So that person comes to you and say, I had this, you know, I've had people do this to me all the time. They know I'm an investment person. So they say, should I buy gold? And I'm like, wait a minute. Why are you investing? What's your purpose for investing? If you're investing to pay your tuition in 2 months, then yeah, you probably don't want to buy gold. You don't want to buy stocks. You probably just want to stick it in a money market account until your bill comes due, because if you buy stocks and the stock market falls 20%, you now can't pay your tuition. All right. So someone comes to you and they say, I've got $100,000, help me know what to do with it. Your very first question is, well, why are you investing? why are you investing this money? If they say, I have no clue, then you have to say, well, you need to figure that out first. Are you going to use this for your retirement? You can use it for your kids' education. Are you thinking about buying some land or a house? You just want to leave it for your kids as an inheritance? You tell me what you need this money for. And anybody notice the key most important thing in all of that? It's a word that starts with the letter H. Any guessers on that?
Held.
Say that again.
How it's held. Held, sir.
Held. That's kind of close to what I'm thinking of. I'm thinking of the word horizon. What is your investment horizon? What does that talk about? What's another word? Time. Do you need your money tomorrow, or do you need it in 50 years? Is that important to what you're going to do? Someone says, I'm 20 years old and I'm saving for retirement. What asset do you think you're going to load them up on, would be your opinion? Maybe stocks, right?
Index fund or something.
Yeah, stock index funds, maybe. Maybe you're going to put them in the tech stocks or something, but they got 50 years or 40 years until they're going to need the money. Yeah, I'm going to put you in the stocks. What if they say, well, I'm retiring next week? You're going to put them 100% in stocks, do you think? Probably
ETF.
not. Well, an ETF can be stocks or bonds, so we'll talk about that. But you're probably going to put them more in the bonds, but you might say, you know what, bond interest rates are really low right now. You could read my blog about what I would do. I would actually put them 100% in stocks, and then I would use options to protect the stock portfolio. But there's different strategies, but I'm more worried about risk with that 65-year-old person. With the young person, I would say, hey, you know what, just stick all your money in stocks and just hope for the best and don't even look at it. Yeah, it's true. The stock market may not do well next 10 years. Maybe it's a little expensive, but 20 years, 30 years from now, you're not going to even notice. All right, so horizon. You need to have the word horizon somewhere in your answer for this question, because that's the most important part of understanding what this person is going to do. All right, so this person's come to you and this guy got $100,000, and you say, oh, you want to build an investment portfolio. Well, let's figure out why you're investing. So that's the first question. Why are you investing? What's the purpose of this portfolio? So at USAA, I went from managing portfolios like the property casualty insurance company or the life insurance company or the pension plan, where I had really clear purposes for the portfolio. Like the pension plan, I knew I needed to manage that pension plan so that we could pay retirement to our retiring employees. I went from that job to head of equities at USAA, where I didn't have all that. I just had a bunch of assets and I didn't know why people were buying them. I did not like that world. That was not my world. I am what's called balance sheet immunization. That's my world. We talk about that a lot in my risk management class. I want to manage a portfolio where I know why the person investing, what they're going to do with that money. All right. So it's usually a liability, some future cash outflow that you're saving for, like a retirement. So when I had managed USA's pension plan, I was managing future retirement for our employees. So I could ask, what drives that liability? Well, it could be inflation, right? If inflation takes off, that's going to be a big issue for the retirees. Longevity. If they all live to be 120 years old, that's going to be a problem for me. I'm going to run out of money in my pension plan. If they all die early at 65, that's great. That's horrible for them, but great for my pension plan because I got more money than I need. Interest rates. So I love that world. That's my most favorite part of finance. That's part of the reason I retired early. If I'd stayed in that world, I probably would have kept on working for some years. So you want to ask, what drives that liability? Is your liability really sensitive to inflation? Then I bet I'll be careful with inflation and what assets I buy. If your liability is really sensitive to interest rates, like a bank, how much in stocks do banks and life insurance companies buy? Do you might know? They've got 40% in stocks, 50% in stocks. What do you think JP Morgan has on its balance sheet? Is it stocks? What do you think MetLife has on its balance sheet? If you go out and look, you're going to discover it's zero. They have nothing in stocks. Why is it? Why doesn't JP Morgan have a huge stock portfolio on its bank's balance sheet? Well, because it's got in net worth for every $100 in assets. If you put 20% in stocks and the stock market fell, they could be completely wiped out. Also, their liabilities are very sensitive to interest rates. So guess what their assets are? Their assets are very sensitive to interest rates. They line those two up. They have liabilities that go up in value when interest rates rise. So they need assets to go up in value when interest rates rise. So they've got to make sure they manage those two things. We can't talk about this in this class. If you take my risk management class in the spring, we go into detail on that. I actually show you how to immunize a bank's balance sheet. It's my favorite topic. I could talk the next 7 months about it and not run out of stuff to talk about. It's really cool stuff. But that's the first thing. Why are you investing? And there's that word right there. You see it down here, horizon. What is your horizon? That's to me the most important thing. Is it 1 week or is it 50 years? So start with that question. What drives the liability? What assets can we buy? They're going to help mitigate that risk. There are things called risk questionnaires. We might next class talk about risk questionnaires because I hate them. I think they're horrible things. I might tell you my story at USAA where I got the financial planners all mad at me because I thought I thought USAA, and it probably still is, a horrible, horrible risk questionnaire. So I might start next class with that discussion because I do think they're horrible. But you can go out there. You might try between now and next class. Just type risk questionnaire in Google and see what comes up. And while you're taking their quiz, see how many of the questions are related to horizon. All right. I might show you a risk questionnaire next class. I think they're horrible. They're very unscientific. The only thing good about a risk questionnaire is the horizon question. You'll usually have one horizon question. Will you need this money next week or in 10 years or 20 years? That question makes sense to me. All the other questions, I think, are horrible questions. They actually encourage you to invest such that you buy high and sell low. That's what risk questionnaires do, which isn't a good thing to do, right? You don't want to buy high and sell at a loss, but that's what risk questionnaires do. But you might try some. The best one out there is one by Ibbotson, Ibbotson or SEN, it's SON, but Ibbotson. His risk questionnaire is probably the best one out there. So you might actually look up his risk questionnaire. I've met Roger Ibbotson twice, really smart guy, very famous, but he has a really good risk questionnaire, but I still don't like it. We'll talk about that, all right? So you see, everybody see where we're going. You're getting your exam question in here. We have these 3 questions. We're going to spend most of our time on the what question. So probably the next 3 or 4 weeks, it's going to be on the what question. Stocks, bonds, real estate, commodities, short-term, long-term, high quality, low quality, high duration, low duration, positive convexity, negative convexity. We're going to be spending a lot of time on the what question, but I'll spend a little bit more time in the next class on the why question.